Okay, so I might start this morning. Good morning, everyone, and welcome to our webinar, Unpacking the New Zealand Government Assistance Scheme. The aim of today's session is to help educate you on some of the ways that the New Zealand Government is helping businesses that have been significantly impacted by COVID-19. We'll cover off the New Zealand Wage Subsidy Scheme, small business cash flow loans, preparing for a Ministry of Social Development audit, and ways to think about cash flow and tax as a SME post-COVID. My name is Richard Bailey, Senior Consultant at JobAdder, the world's fastest growing recruitment platform. And today we're joined by Doug Haines. Doug is a partner in BDO's advisory team in the Wellington office. Over the past 25 years, he has acted for some of New Zealand's best known for-profit brands, as well as not-for-profit organisations and charities. He has been active as an advisor in the recruitment industry, including mergers and acquisitions support for businesses buying and selling. Doug will take us through his presentation, and then we will cover off some of the questions that were submitted at registration. Over to you, Doug.
Thanks, Richard, and thanks everyone for making time to listen into this important webinar. This webinar summarises the support that government is providing to businesses during this time, as well as some other commercial matters for you to consider. Look, I know that you're probably getting updates from lots of sources at the moment, and some of it can be confusing. So we've accumulated the facts into this one webinar so that you have a better understanding of the support that is available to you. Before we kick off, just want to refer to this quote from the Minister of Finance, Grant Robinson, who's been quoted as saying, "We need our businesses to stay solvent to help with the business recovery." There have been lots of initiatives rolled out over the last 3 months, so let's have a look at some of them and how they might impact you. Right, today we've got a few agenda items for us to focus on. It looks a lot, but we're going to whip through it. This sort of stuff is super exciting to me as an accountant, and I know this might not be the case for the rest of you. So what I've done is try to make each topic as short and sharp as possible, summarising only the key things which I think you need to know. So today you'll see that there's a mix of information around the original wage subsidy, as well as the wage subsidy extension. I'll cover off the 2 loan schemes that are available, as well as some good initiatives from the IRD in terms of debt relief and tax losses. I'll quickly cover off the changes to the Companies Act in terms of insolvency related matters, and then we must pause and think about strategy. Rich will also have a look at some of the questions that have been raised, and we will do our best to cover off a few of those. Look, I know we all have day jobs, and I don't want to get in the way of your important work. So we'll try and whiz through all of this within 40 minutes or so. It might free up a bit of time so you can nip out and grab a coffee before your next appointment. Okay, so let's set the scene now. Let's just have a look at the summary of the wage subsidies from what is publicly available information. So on this graph, on the slide, I've put some graphs which has all been sourced from data from the MSD website, and they update this weekly. And when I prepared this presentation earlier this week, the last available update was Friday, the 12th of June. And at that date, there had been 551,000 applications received. Now, pretty much all of this number will relate to the original wage subsidy, as applications for that closed on the 9th of June, with the new wage subsidy extension opening on the 10th of June, and these stats are as of 12th of June. So not a lot of room for the wage subsidy extension numbers to fall into these graphs. The total wage subsidies paid out total 11.2 billion, covering 1.67 million jobs. If we did some simple math, comparing the number of successful applications to the total amount paid out, the average payout per application is around $23,000, which roughly equates to the average applicant applying for 3 full-time employees. 89% of applications received have been approved, whereas 11% have been declined. And I'll cover that off a little bit later. 86% of subsidies have been paid to employers to cover employees, with the balance of the 14% paid to those that are self-employed. Interestingly, the self-employed workforce is estimated to be just over 400,000 people in New Zealand. So to date, it appears that around 55% of all self-employed have claimed one or more of the subsidies. Let's have a look at the wage subsidy extension. And of course, as the name of the subsidy suggests, this is an extension on the first tranche of the wage subsidy. That first initiative ran for a 12-week period from 17th of March up until 9th of June. The government then introduced a second round from 10th of June, and applications closed for the extension on the 1st of September, so an 8-week period, a 12-week period, sorry. The subsidy is a lump sum payment for employers to pass on to employees. If you're self-employed, this subsidy will be for you alone. The actual extension covers an eight weeks per employee and pays the same amount as the first tranche, being $585 per week for someone that is a full-time worker, which is someone that works 20 hours or more per week, which totals roughly $4,600. And for those that work less than 20 hours a week, the employer receives $350 each week. And obviously over that 8 weeks, 350 times 8 is $2,800. So employers must wait 12 weeks from the date they apply for the original wage subsidy. So that's the 12-week period to come to an end before they apply for employees for the wage extension. So in other words, you cannot receive both subsidies at the same time. To qualify, your business must have suffered or is projected to suffer at least a 40% decline in total revenue compared to the same period last year. You may recall the government started at 50%, came out shortly before the 10th of June that it was going to be the 40%. The 30-day period that you're measuring must be within 40 days or prior to the date you actually apply. Okay, so you've got basically a ruler, 40 days, the date you apply, 40 days back, and you can take any 30 days within that 40 days. Businesses must sign a declaration about their circumstance, including that they will retain the employees named in their application, only those in their application, for at least the duration of the wage subsidy extension, which is 8 weeks. Remember that the period of applications is 12 weeks, but the actual amount you receive is over a period of 8 weeks. That the employers acknowledge that receiving the subsidy does not override the employer's existing obligations under employment law. And I'll briefly cover that off in a second. That employers will remain responsible for paying their employees' wages or salaries, and for the period they receive the subsidy, they will use their best endeavours to pay at least 80% of each named employee's ordinary wages or salaries, and pay at least the full amount of the subsidy to the employee. But where the ordinary wages or salary of an employee named in their application was lawfully below the amount of subsidy before the impact of COVID-19, pay the employee that amount. So if an employer has to make an employee redundant during the subsidy period, they can use the subsidy to pay the employee any notice period arising from the redundancy, and then they must repay any balance of the subsidy to work and income that's left after the notice period has been paid out. An employer cannot use the subsidy to make any contractual redundancy payments to an employee. Redundancy payments should be made in accordance with the provisions in the relevant employment agreement. Although we're not lawyers, I must briefly mention that employment law has not changed. The wage subsidy and wage subsidy extension operate alongside existing employment law. Employment obligations have not been removed or changed by employers accessing the wage subsidies. Employers and employees must discuss in good faith the implications of COVID-19 on their working arrangements. They've changed. Employers and employees considering changes that involve impacts on the continuity of employees' work, such as changes to job descriptions, reducing the hours of work, or where no alternative arrangements can be found, redundancy may be considered. These changes, as I've mentioned, must be discussed in good faith and use agreed consultation processes. Now, specifically in relation to on-hire and temping agencies, providing they meet the eligibility criteria, agencies could apply for the wage subsidy, original one up until 9th of June, and the wage subsidy extension from 10th of June for all on-hire workers who are employed by the agency, whether or not they are working for a client at the time of application. The subsidy is also available to employers who have already let employees go because of COVID-19, provided they rehire those employees before they apply for the subsidy. The wage subsidy extension can be accessed by labour on-hire and temping agencies for any employees, so casual, fixed, permanent. Independent contractors can apply directly for the scheme if they meet the eligibility criteria. So to apply, as you probably know, you go to the Work and Income website. If you need any help, give us a buzz. Remember though, that anyone can search that public register that's available online and see if a particular business has received a wage subsidy, along with how much they received. If you receive a subsidy and it turns out that you weren't eligible, you will need to repay that subsidy. Hey look, there's some really useful guidance out there, which I've used throughout this webinar, including our own bdo.co.nz website, but I also refer you to the employment.govt.nz site, as well as workandincome.govt.nz. There's a lot of good information on all three websites for you. And just a reminder about how to treat the subsidy from a tax perspective. So the receipt of either of the wage subsidies is exempt for income tax for employers. However, for self-employed individuals, the wage subsidy received will be treated as taxable income, as it is a payment that replaces loss of earnings. Regardless of being an employer or self-employed, the receipt of the wage subsidies does not attract GST. The payment to staff, though, is quite separate to the receipt of the subsidy. Any wage payment made to employees will form part of the employee's taxable income, and regardless of the amount to be paid, should have the appropriate PAYE, KiwiSaver, etc. deductions applied. Okay, let's just have a quick look at a case study which may be relevant to your industry. So John is an IT analyst. He's working through a temping agency and he's at an IT company. For the past 3 months, he's been working at that IT company for 30 hours per week and receiving $50 an hour. So therefore a normal income of $1,500 gross per week. During alert level 4 and on, John continued to work 30 hours per week from home. As other agency clients did not require temporary staff, the agency itself experienced a 30% loss of revenue. So John's employer, which is the staffing agency, accessed the wage subsidy scheme. As he was still working, John continued to be paid the $1,500 a week, with his employer using the $585.80 weekly subsidy payment to subsidise John's wages for that 12-week subsidy period. The impact of COVID-19 continues to affect requests for temp staff from that agency. As a result, the agency meets the 40% decline in revenue test, which is the extension obviously, so it applies for that wage subsidy extension. And they apply for that extension at the end of the initial 12-week subsidy period. So remember, you can't claim both at the same time. John's employer continues to pay John $1,500 per week and uses the subsidy to put towards his pay for the further 8 weeks. Okay, let's now turn to MSD audits, and I'll just have a quick drink. So looking at MSD audits, or perhaps I should say the lack of publicly available information about MSD audits, because the last public report was issued on the 24th of April, which is just over 8 weeks ago now. We know that there are more than 100 dedicated auditors on the job and close to 2,500 audits have been completed. The report stated that 7% of these needed following up, but unfortunately there was no details around what this actually means. We also know that employers have paid back quite a bit of the subsidies received, as I'm guessing that the predicted 30% drop in revenue just didn't eventuate. Some did this voluntarily, whereas others were asked to do so. What we know is that audits appear to be selected fairly randomly, but with any form of audit, we suspect there will be some risk-based assessment included in the selection process, and no doubt some prioritising where MSD has been tipped off. We do know from clients that have been audited that the process seems to start with quite a simple questionnaire, which actually is not too dissimilar to the key requirements found in the declarations. And remember that there has been now 3 declarations. There's the one pre 4 p.m. on 27th of March, one post 4 p.m. on 27th of March, both in relation to the original wage subsidy, and of course the new declaration for the wage subsidy extension. So with that questionnaire, we suspect if the MSD aren't happy with the answers provided, they then progress into more formal discussions. So my advice to those of you who have claimed a subsidy, and to anyone, is to approach this on the basis that you will be audited, and therefore make sure you have a very robust file to support your stance in relation to the claim. A simple Excel or Word file should ordinarily be sufficient, and what we recommend is that the applicable declaration is cut and paste into your document, and you treat this like a simple checklist. You should also have proof of the revenue decline, and I note that there is a neat little revenue calculator which you can find, you've got your pen handy, at www.business.govt.nz/COVID-19/revenue-calculator. Right, moving on to the small business cash flow loans. It's on the next slide. Here we are. So the government has announced a new loan scheme for businesses with 50 or less employees to assist with the payment of operating costs. A business can borrow $10,000 plus $1,800 for each equivalent full-time employee, up to a maximum of $100,000. There's no interest if it's paid back within a year, otherwise 3% for up to 5 years, with no repayments required for the first 2 years. Applications can be made via a My IR account at IRD between 12th of May and a date which has now been extended to the 24th of July inclusive. Businesses will need to be eligible for the wage subsidy, as well as be able to declare that they are a viable business and have a plan to ensure it remains viable. So we get asked all the time, what does it mean to be viable? Well, the IRD have indicated this generally means, as a director or owner, you expect to be able to pay your debts as they fall due within the next 18 months. Evidence of viability will be required at the time of applying for the loan, and this may include cash flow forecasts, business plan, and financial statements. Now, I'm sure that you'll be doing that anyway, and we'll touch on strategy and forecasting shortly. An application will require what's known as an NZBN. This is a New Zealand business number, and all New Zealand registered companies will already have an NZBN. If you don't have one, so you're not a company, you will need to apply for one before you apply for the small business cash flow loan. Loans are not subject to income tax or GST, and you can claim as a deductible expenditure the operating expenses paid for with the loan funds. This scheme's actually proven pretty successful to date and was a welcomed initiative. Right, if we move on to the next slide, if we have now a loan at the Business Finance Guarantee Scheme, which is an initiative, unfortunately hasn't worked so well as the IRD loans, and hence the reason for the IRD loans coming along. So very quickly, eligible businesses may apply for one loan for up to $500,000. Loans will be for a period of up to 3 years at interest rates from around 4%, but those actual interest rates will vary depending on each business and will vary slightly from bank to bank. The loan must be used to cover operating expenses, things like wages and rent, rather than to fund CapEx, such as buying a new car. Having said that, CapEx of up to 5% of the loan is typically allowed. Now, the government is guaranteeing 80% of the risk, while the banks are covering the remaining 20%. A normal lending process will be followed by the banks, which will make the lending decisions. Further details can be found on your bank's website and in some cases an online application form. So there's plenty of banks participating in the scheme, including ANZ, ASB, BNZ, Heartland, HSBC, Kiwibank, SBS, TSB and Westbank. Hey, look, unfortunately it's been a bit of a flop. Within our practice, we haven't had a lot of interest or uptake, which is of course why the IRD loans came about. Okay, let's move on to some IRD relief. And this is certainly a welcomed bit of good news. So to be eligible for remittance of penalties and use of money interest, taxpayers must meet the following criteria. They have tax that is due on or after 14th of February. Isn't that Valentine's Day? That's good news. So their ability to pay by the due date, either physically or financially, has been significantly affected by COVID-19. They will be expected to contact the Commissioner as soon as practicable to request relief and will also be required to pay the outstanding tax as soon as possible. They must have been significantly adversely affected by COVID-19 financially, and their income or revenue has reduced as a consequence of COVID-19, and as a result of that reduction in income or revenue, are unable to pay their taxes in full and on time. Look, it's still pretty subjective. As soon as practicable will be determined on the facts of each case, but IRD considers the term means that so long as the taxpayer applies for the relief at the earliest opportunity and agrees to an arrangement that will see the outstanding tax paid at the earliest opportunity, all will be paid over the most reasonable period given that taxpayer's specific circumstances, that test will be met. The IRD accepts that customers will have difficulty paying all their taxes in full and on time. However, it is important that taxpayers continue to file the returns on time. The information in those returns will allow IRD to have a more complete picture of a customer's financial position when considering the various options for relief. But also, the information in those returns provides important information to the government. So at the present time, to be able to monitor the effects of COVID-19 on the New Zealand economy. The IRD has been given discretionary power to provide an extension to due dates and timeframes across all tax legislation. This could include, for example, extending deadlines for filing tax returns and paying provisional and terminal tax. At this stage, the power will be limited for a period of 18 months. The key there is just discussing this with the IRD, ensuring that there's a file note on their records. Right, let's move on to the tax loss carryback scheme. Again, another great bit of news for us. So the new loss carryback scheme will enable a business to offset a loss in a particular tax year against a profit in a previous year and receive a refund of the tax paid from that previous profitable year, because obviously we're profitable, we pay tax. If we throw a loss on top of the profit, out pops the tax we paid, or at least some of it. The mechanism will provide cash to businesses that are or anticipate being in a loss. Tax losses in the 2019-20 year or 2020-21 income years can be carried back to offset against taxable profits of the preceding year. So just on that is a 1 year carryback only. Application is with reference to a tax year, so not a moving point in time. Therefore, the ability to avail will be dependent upon your balance date. Your estimation of tax losses is permitted, so not necessarily filing a return for the current period. The carryback can be utilised across a group of companies, providing there is sufficient commonality of shareholding, which is 66%. The legal form of business isn't relevant. There are no restrictions on the type of structure a business operates from. However, and this is not a surprise, tax losses arising from residential rental activities are excluded. Let's just run through the tax loss carryback case study. So, Company A was, up until recently, in good financial health. It is expecting to return $200,000 in net income for the year ending 31st of March 2020. Company A has already paid $45,000 in provisional tax, and it had a final provisional tax payment of $11,000, which was due on the 7th of May 2020. So this will be ringing true for some of you on the webinar. But as a result of the COVID-19 lockdown, Company A has temporarily halted its business activities, although it continues to pay certain overheads. The directors met a week before the 7th of May payment and projected a loss for the next financial year ending 31 March 2021. Although the projections are only estimates at this stage, it looks like Company A will have a tax loss somewhere around $150,000 to $200,000 for that 2021 year. So, Company A is able to alter its third provisional tax payment. If Company A adopts the income projection for the 2021 year at that lower end of the scale, so $150,000, it can carry back this loss to the 2020 year and re-estimate its income for that year to be $50,000 because it had a $200,000 profit. We're forecasting a $150,000 loss. We throw that loss on top of the profit. Out pops a $50,000 net profit, so to speak. But remember, because it's already paid $45,000 in tax, it paid nothing on that 7th of May payment, and it actually receives a refund of $31,000 from its earlier provisional tax payments, because $50,000 at 28%, less what it's paid. Okay, moving on. There's been some new legislation enacted to help companies facing insolvency due to COVID-19 to remain viable. Relief under this legislation includes giving directors of companies facing significant liquidity problems because of COVID-19 what's called a safe harbour from insolvency duties under the Companies Act. Company directors are not supposed to continue to trade whilst a company is insolvent. Well, one of those tests being that a company can pay its debts as and when they fall due. But the reality is that many businesses may face insolvency, so this is a practical change to the Act. The changes enable businesses affected by COVID-19 to place existing debts into hibernation until they are able to start trading normally again. The new Act allows the use of electronic signatures where necessary due to COVID-19 restrictions. The Act gives the Registrar of Companies the power to temporarily extend deadlines imposed on companies, incorporated societies, charitable trusts, and other entities under legislation. And finally, the Act itself, I should say, provides temporary relief for entities that are unable to comply with the requirements in their constitutions or their rules because of COVID-19. Okay, moving on now to strategy. I've covered off some very mechanical matters around subsidies and tax, but I really do want to pause for a moment and make sure that the most important facet of business is being contemplated by you all. And that, of course, is your revised strategy. And once you've revised your strategy, then revising your cash flow forecast. I've actually been inspired enough to write a couple of articles on this, which have been published by Stuff. But for me, the most impressive thing that has come out of all this horrible situation is the leadership shown by our clients. And I'm sure you have too. Those that will survive and thrive have had amazing people at the helm. They're the ones that have rolled up their sleeves. They've been there to drop off the laptops to staff, and around town here, I could see them rolling office chairs to people's apartments as we went into lockdown. they're the ones that kept in touch via virtual platforms as we're doing today. So that, and actually they're platforms that they've never used before, but they demonstrated vulnerability to their peers and learned how to use them. In fact, a lot of them ended up being blimmin' good at them. And they showed empathy, but provided clear decisions. And these decisions were not based on the short term, but on the medium to long term. They are the people that make their business successful and have created such loyalty from their staff that it will be repaid back in spades over the years. They're also the leaders that tried to learn and share from their peers and other organisations, including competitors. And as we now come back to new normal, they are the ones that are making morally sound decisions about such things as buying locally. So for me, planning and leadership is fundamentally essential right now. And of course, accountability needs to be wrapped around all of it. Okay, I also want to let people know that we have a free resilience guide, which is on the next slide, and it's available to you, our audience. It's all about how to approach the 3 phases of rethinking your organizations, being react, resilience, and realize. To get this, you just need to go to our website, and I refer you to the hyperlink on the screen. That actually concludes my presentation. Back over to you, Rich. I think you've got some questions for us.
Hey, thanks, Doug. That's great. Really awesome to hear some of the more mechanical, as you say, side of the support available, but also balancing up the humanistic side of empathy and leadership that's going to get us through this crisis. So thank you for sharing that. In terms of questions, look, we've got 3 that we'll go through today. These were logged at registration with the attendees. So the first one here is, my business hasn't been going for 12 months, so I don't have the figures to compare to the same time last year. I know my revenue is way down, so can I claim the wage subsidy extension?
Okay, thanks, Rich. So hands up, who believes you can? I can see it. No, just kidding. So the good news here is yes. Employers who have been in operation for less than 1 year or have experienced high growth will still be able to apply for the wage subsidy extension. And this also includes pre-revenue R&D startup firms that are recognised by Callaghan Innovation. These employers may therefore need to demonstrate their revenue loss against a comparable 30-day period in another comparable month within the last 12 months, as opposed to a year-on-year comparison.
Okay, hey, that's great. Thanks for that, Doug. Second question, my business reports financial results on whole calendar months, so I cannot prove the 40% reduction in the 40 days prior to the 10th of June 2020. Can I still apply? Okay, all right. You'll need to keep evidence of the 40% drop in revenue when applying for the wage subsidy extension, no matter what. So as the wage subsidy extension is open from 10th of June, so was that 13, 14 days ago, 2 weeks ago, until the 1st of September, you've got quite a large window to apply. So just thinking through, it might be easier for you to make your application, say, on the 1st of July, and then you'll be able to use the 30 days of the month of June to base your revenue test within your application. Okay, cool. Hey, thank you. And then finally, I've heard that there's a change to the tax rules around assets, and now we can expense stuff sooner. Is that right? Yes, you can. So well done, whoever grabbed that one. It's an immediate and very welcome relief package. That low value asset write-off threshold that increased from $500 up to $5,000 for assets purchased, but it's on or after 17th of March this year. So those low value assets can be written off for tax purposes, providing the cost is less than $5,000. And just to clarify, if you are GST registered, the cost refers to the GST exclusive amount. And therefore, for those that are not registered, the GST relates to the GST inclusive amount.
But you've got to be pretty careful about working this out, because while an asset on its own may fall below that threshold, you are required to consider the total cost if you bought multiple items multiple items of the same from the same supplier. For example, a desk. This desk here I'm standing next to, this might cost $400 plus GST. However, if we bought 20 of them from the same place, same time, the relevant cost is the total cost. So what I say, $400 times 20, so $8,000 plus GST, and therefore that threshold is exceeded and you need to capitalize those assets. And unfortunately, the $5,000 threshold drops to $1,000 from 17th of March 2021, so a year at that $5,000 threshold.
Right. So certainly helpful to business owners.
Indeed.
Nice. Hey, thanks, Doug. Thanks for taking the time to answer those questions, taking us through the presentation today. Found that very informative and entertaining. So thank you. It was great to have BDO along supporting this webinar, and it would be remiss of me not to mention that BDO are the largest accounting and tax advisor to New Zealand's mid-market, which includes most of us on this call today. They have a fantastic website, and I've been told that they have answers to all your questions in relations to the wage subsidies and tax initiatives. Just go to www.bdo.nz. And as Doug pointed out on his final slides, you'll be immediately able to see the COVID-19 page. Click on that and choose your topic. That concludes our webinar today. Thank you very much, Doug, again. Thank you to those of you who have taken the time to attend, and we look forward to seeing you all in due course.
Thank you.
Cheers.